Good day, everyone. My name is Justin Smith. I'm the CEO of Bloomberg Media Group, and I'm really thrilled today to welcome Aryeh Bourkoff, who is the founder and CEO of LionTree, the leading global investment and merchant banking firm focused on media, technology, and telecommunications, an advisor to many CEOs around the world in these industries and beyond. Welcome, Aryeh. We're thrilled to have you with the year ahead this year.
Thank you, Justin. Thank you to Bloomberg, and thank you for having me today.
Great. Well, let's start with this this very dense and information-packed year-end letter that you wrote in December, where you wrote that after COVID, we must realize that there is no going back to normal, that we must set a course to go forward to the extraordinary. What do you mean by that?
Well, it's very risky to write a year-end letter in an industry and a time like ours because things move so quickly, because we could already be outdated. But we tried to pack a lot of things in to make sure that things were still relevant. So thankfully, things are still on theme. But according to that point, which is when we first started this pandemic, remember, we all went to cease operations as normal in March of last year for a few weeks at the beginning. And the expectation was we were going to go back to the office only after a few weeks. And when can we go back to normal? We were all asking ourselves, when we will go back to business as usual. And then I think we got to a point where we were just going to be settling in to what was going to be the new normal. And I think along the way, really, we started to think about what can we do looking forward to something different. And we don't know what that's going to look like yet. And now I think it's really about building towards an unknown, building towards the future that we all want to make our own for society, for the industries we focus on, for our governments, for our people. And I think we've uncovered during this pandemic a lot of acceleration, a lot of progress, but also a lot of problems. So I think this is really about building a forward-looking environment that goes to the extraordinary, to the extraordinary for certain. Hopefully we'll make it something we're proud of, but it's going to take a lot of effort.
Yeah. Well, and you also write about this interesting idea of that across the last 12 challenging months and beyond, that we're sort of at a point where we need to decide now which habits and perspectives to bring with us and which ones to leave behind. So how does that apply to CEOs and business leaders?
Yeah, there's also a kind of toolbox that I think all of us use during a crisis. And there are certain leadership patterns that I think we've all employed for our people, putting people before profits and thinking about different ways to manage. We certainly have done a lot of best practices, conversations with different CEOs to really figure out how we're dealing with different things along the way, and bringing CEOs together in the media and technology industries to talk about things. And I know you have great speakers like Brian Chesky at Airbnb, and he wrote a famous letter right in the middle of the pandemic about how he was going to be treating his employees that really got a lot of attention even before the IPO patterns. And I think that everyone was struggling with how to do those things. But those are tools that you kind of keep in the pandemic toolbox, thankfully. But there are other things that you take from your business patterns that you want to accelerate into a future structure. And a lot of that has to do with direct-to-consumer, remote working, digitization, and things that should have been maybe done already, particularly in media. So you've seen a lot of media companies now put a plus sign at the back of their name. So Disney Plus, Discovery Plus, Paramount Plus. We've seen a lot of that happen. And that has everything to do with a new value proposition. We're going to reach you directly. We're going to get to you not in a venue, not in a physical location, but in a virtual location. And that will be applied, in my mind, to education, to healthcare, telemedicine. A lot of other industries, not just the Amazons of the world, will have to reach the consumer directly in other ways virtually. And this period of time has been an accelerant to that. So what do you leave behind as a toolbox in the pandemic, hopefully staying there? And what do you bring with you is a key theme for us, personally and from the industry's perspective.
What's interesting about this idea of putting the plus in front of your brand, I mean, obviously Disney Plus is held out as the kind of the best example of an established large media company that's thrown so much of its investment and focus onto that. But what does it mean to actually genuinely put the plus on? I mean, as opposed to just putting a a superficial plus. They're talking about it. What does it mean as you're running a company, as you're making those tough trade-off decisions about strategy, investment, resources, capital? What does that mean?
Well, in the media industry, which we've had the pleasure of working in for over 20 years, you've constantly seen businesses go through periods of transition. I remember beginning with the music industry. It went from purely physical, records and LPs, and for those that remember, 8-tracks, and then a completely digital world with now Spotify and Apple and Google, and a completely audio podcasting world. Right, that has gone through transitions. You've seen that cycle through every part of media, and now I think you're seeing a cycle through every part of industry, partially accelerated by this pandemic. When you put a plus sign at the back of your name, it signals that you're going through a transition. I think there are very few companies that have done it as well in such a short period of time during a challenging moment as Disney in 2020, and it continues today. Disney, at the beginning of this pandemic, was viewed as a company, among other things, with a theme park and a movie studio as part of their investment thesis. And they ended the year, and they continue to now talk about a streaming service with Disney Plus, and that's the investment thesis in the stock, and it's completely turned into a growth stock. And the theme park and the studio, clearly part of the investment thesis, but that will recover post-vaccine and post-recovery for the economy, and then be a sort of an added benefit to the story. But the stock has not been held back at all, and they've transitioned during a very challenging time. I say it's like returning a kickoff in football, not only kind of dodging people running at you that are kind of the 300-pounders running 100 miles an hour, incredibly fit, but also running upfield with a stadium shaking. It's a very difficult thing to do, and that takes understanding of capital structure movements, shareholder dynamics, and a really investment thesis shift. And that's going to happen with industries overall. But eventually, the plus becomes the company, and I think you'll see that by and large.
And do you think that, like the technology platforms, that this is a kind of first mover, winner take all type of situation? I mean, everyone talked about, obviously Netflix so far ahead, Disney Plus is catching up, but now everyone's adding pluses, everyone's sort of offering more fragmented streaming opportunities. The advertising ecosystem around OTT is going to boom this year. It's going to be the fastest growing area. Is it going to be like the tech platforms, or is there going to be more room for more players and more fragmentation?
Well, it depends on a few things. One is what you're offering. And then secondly, what your reach is. So if you have a first mover advantage, it's all about how many people you're reaching around the world. It's not just a national or a regional product. These are above the globe companies. How many people are you reaching globally? Disney, Netflix, Apple, Google, Facebook, you're competing for the worldwide audience. That is a massive undertaking. Netflix has had the head start with video streaming, and others are catching up given the quality of the brand. Not everyone will get to a global scale. And then the second question is, what are you offering them? Are you offering just video, or can you then complement that video offering with audio, video games, commerce, social commerce, maybe fintech, other offerings? And do you trust that platform for all those different offerings? And that's where fragmentation starts to come in. Different platforms will have different levels of expertise, not a one-size-fits-all. Our theme last year was scale players in motion, and that the scale players are now going to go get it. And now you're seeing, given the capital environments and obviously SPACs and everything else, these other players coming to market and building an audience with low cost of capital. And I think you'll see multiple players try to get to that audience and try to win, along with a few big players.
And and obviously, you've written a lot about the tech platforms and the regulatory environment, which I want to get to in a second. But as relates to the streaming wars, how do you see the tech players evolving in 2021 in that particular segment?
Well, you have to find, once everyone kind of accelerates into having the same global reach and all high quality brands, whether it's Amazon, Apple, YouTube, Facebook, et cetera, then the question is, what's the point of differentiation aside from price? And it has to be content. At the end of the day, it's going to have to be content. And so that content will either be leased to many, and that will create rooms for studios to be able to have like the new kind of Warner Brothers studios where you're selling to many different platforms, and that's an opportunity for content production companies to come up anew, or exclusive content for each platform. Disney certainly has more of a closed platform where they're only selling their content, and you'll start seeing other platforms buy proprietary content or develop their own content IP that you can only get when you're subscribing to Amazon Prime, for example. So I think you'll start to see more of that, but also more innovation. I also talk about the video game ecosystem as being the new streaming platform or the new internet, the new metaverse, right? And you think about video games as being something that we play, or as a game or something that our children play, but it really is a platform. And we saw during the pandemic when you couldn't go to a concert, Travis Scott, rapper, urban artist, had a concert in Fortnite virtually. So if you kind of extrapolate that trend, you'll have movie premieres in Fortnite or in video game platforms, and you'll have all forms of media and all forms of social and then commerce on the video game platform as a metaverse. So you'll have other platforms aside from just video streaming. So I think those will emerge as well. And then the last double click on that's scale. Now let's go to fragmentation. Once you have those platforms set, then it allows for individual brands and smaller companies that have individual communities that have a lot of affinity and brand affinity to develop very rich models with cash flow streams on the back of that platform. So, Jeff Bezos says that Amazon was created benefiting from the platforms that were created before his. One, the FedEx system, delivery, and two, the credit card system, payments. They were already created before Amazon. So anyone that wants to create a business now on commerce and brands can be created or content on these big platforms that will have its own sort of mediaification or media. It's like an individual fragmented communities that can build big brands. Think of LeBron, think of the Kardashians, think of brands like that can have massive audience and massive cash flow streams.
Well, you're describing a world where the tech platforms are sort of plunging straight, forward into basically operating content companies. I think 2021 will be the year when the big tech platforms admit to the world that they are media companies, or what is? Go ahead.
Yes, it's happening now. I think it's a complete. There's definitely a media responsibility ownership that the tech platforms have right now, and it's it's obviously in all ways it's being pronounced in social media, but all tech platforms have that. Obviously, the FTC lawsuit against Facebook is the biggest legal representation of that, but all sides of the political spectrum agree on this full partisan issue. But also, I think all parts of society and all the tech company executives also believe in this. So no one's fighting it. It's just a matter of how you work together to create a responsible playing field. And I think it's not necessarily akin to the media that we grew up with, because media, even Netflix, curates content, kind of is responsible for the content that they put on the platform. Whereas some of the tech platforms would argue that they have a platform for voices. And I wouldn't say free speech, because that's a government responsibility, not a corporate responsibility, but having a platform for expression, not curation. But still, there's going to be much more of a regulatory thread there that has to be worked out in partnership with the government. And I think, the FTC Facebook lawsuit will probably be a good template for that. But I think the policies are already in place in a lot of these companies. They just were very late to be put in place, and has exposed all of us in society.
What is LionTree, in your view, of the Biden administration's kind of approach to the regulation of the technology giants? Do you think it's going to be ratcheted up? Do you think it's going to be the continuation of the Trump administration?
I don't think anything about the Biden administration is a continuation of the Trump administration per se, from what I could see so far. But I think basically it's early to assess how Biden will work with the tech platforms. My hope is, given the experience in sort of government that the Biden administration has, that they will be collaborative and pragmatic, as opposed to kind of regulatory first. I think it's important to recognize the innovation around these platforms, and that they were built with the right purposes in mind, not to promote negativity. I think that there's some learnings along the way, but I don't think they were ill-intentioned. I think Mark Zuckerberg was incredibly innovative and forward-looking. If you read the FTC complaint, in the way that he kind of built the platform. He was way out ahead on kind of what networking was all about. I think Apple, same thing, and other platforms as well. So I think things have to be done for the benefit of our responsible industries right now and society, but they have to work together. I think it has to be a pragmatic approach that can be viewed as a partnership, not a counterparty.
Yeah. So switching gears a little bit and actually do an area which we care a lot about a lot of Bloomberg. I know you're very knowledgeable and you advise folks in this. Where do you see the news media industry going in 2021? Domestically around the world, do you see the continuation of this polarization of content and brands as sort of the main theme, or do you see something different?
Well, I do think that this polarization of sort of cable news is continuing. It seems to be more interesting television for people, but it's unfortunate from my perspective because I prefer to have more of a, I wouldn't say centrism because I guess that word is now viewed as being boring, but sort of like the factual kind of place to get your news that has a return to kind of like mass audiences and mass advertising models.
Sort of
I think in reality, what's happening.
A bit like Bloomberg, right? Sorry,
yeah, Bloomberg, but Bloomberg is under optimized for the quality of its content, right? You could have much broader distribution and a much bigger audience base and advertising as a result of it. So, and I'm sure that's a focus. But I think at the end of it, I mean, given the credibility of the brand, especially, and certainly I'm sure you could think about SPACs as well to go public. But at the end of the day, I think that what's really happening are these community subscription newsletters. So I think the edge communities of news media is really what's happening. It doesn't mean it's kind of a far right or far left. I wouldn't confuse it with political spectrum. I would confuse it with community and what communities are looking for. And their subscription newsletters that I think a lot of the news organizations and a lot of the audiences are going to migrate to that can be more fragmented, but people will have a dual stream of revenue where there's subscription and there's advertising as well. And that is taking off right now for news.
Yeah. And what about, I mean, the upstarts in digital media that were upending the marketplace a few years ago that have kind of run into some troubled waters like a BuzzFeed or Group 9 or a Vox or a Vice? Do you think that they can be sort of find an exit through this SPAC revolution, or is that not a likely outcome?
Yeah, I think those platforms are still great platforms, and I think you mentioned a lot of names in there. I think some are consolidators and could be great public companies. Other would be more targets or have different strategies. But I think there's not just digital media, the names that you mentioned. I think they also have different ad vertical platforms and different ways to extend their brands beyond just digital media and news. Certainly there could be consolidation among all of them. But I wouldn't foreshadow those right here today. But the SPAC world could lend itself to some accelerant activity around that right now. And look, there's a company that we actually invested in through our Kindred Media business called Punchbowl. That's one of those subscription newsletters right now that's having a nice timely kind of launch given everything going on in Washington today. But I think everything happening in news and politics today is so relevant to technology and so relevant to clearly the redistribution of wealth in our country in the U.S. and obviously where we're headed as a society that it's just so important to invest in those outcomes. Yeah,
well, Punchbowl had a big breaking news story this morning on Capitol Hill, so congrats on that. We've just got a minute to go, and I just can't. I have to ask you, just as such a prominent deal maker, we didn't see any major transformative deals in 2020 in the media ecosystem. What would you see looking forward in 2021, and any ideas of companies that might trade?
Well, 2019 had some massive deal making in media. Obviously, you had things like AT&T, Time Warner, you had Viacom, CBS, and you had kind of like the scaling up of these platforms kind of in media long overdue. You had a bit of deconstruction going on in 2020 along with the pandemic. Like obviously, we participated in the sale of Simon & Schuster from Viacom, CBS, and there was a lot more M&A in the second half of the year particularly in the tech side, more than just media. So you are going to see some portfolio optimization, maybe some deconstruction of some of these portfolios as you get into 2021. I think focus is good for media, and SPACs will help kind of crystallize that. The markets are very strong for that. And then I think you'll start to see some redistribution of that. But I think tech and media coming together is still going to be a big theme. But media is now in a growth mode. Media has figured out their plus strategy, and they're going to go for it. And the investment horizon and the shareholders are rewarding it. So they're going to stay focused on that and going to keep focused on the streaming services and the video games. And then I think you'll see some consolidation among the players once their investment thesis is now focused on growth versus just the cash flow streams of the core business.